Since the advent of radio over a century ago, the telecommunications industry has come a long way, and the digitalization of society, even before the pandemic hit, has been nothing short of remarkable. But in today's technology-filled world, the telecom sector has needed to meet an increased demand for faster data speeds to support our ever-changing digital world. Back in December 2020, the Federal Communications Commission, or FCC, offered an auction for some of the US's largest telecom companies for additional spectrum to power their networks, and that led to some very intriguing investment opportunities. My name is Anu Rajakumar, and today on Disruptive Forces, I'm joined by Darren Carter, Senior Research Analyst on our Credit Research team here at Neuberger Berman, to share more on what's going on in the industry as we expand further into the digital revolution of today. Darren, thank you very much for joining me.
Great to be here, Anu. Thanks for having me.
Now, the telecom sector is massive and so integral to society. Tell us about the demand for telecom services and what are some of the trends that you're seeing across the spectrum?
Absolutely. Fundamentally speaking, the demand for communication services has never been stronger. The amount of data we all consume just increases every year. The speed at which we need to access this data increases as well. This whole concept of connectivity everywhere, of being able to access our data any place, any time, everybody expects that. And the number of internet-connected devices just continues to explode. It's not just the consumer side where we're seeing this. The enterprise side of the business sees this as well. And if anything, COVID just accelerated a lot of trends that were already in place and really amplified the importance of data connectivity to everyone. When work from home and school from home became household words, the need for fast, reliable data service became even more pronounced. So on the basic level, the demand for data services is very, very strong. Telecom companies, however, they experience price deflation. And what I mean by that is the price per bit to transmit and receive data declines every year. This is something that's been going on for some time. And I mean, just think of your own cell phone. Each year, you use your cell phone more and more, use more and more data, take more and more pictures, stream more and more video. But your cell phone bill is really more or less the same year in and year out. The story is similar on the enterprise side. We talk to a lot of CIOs and CTOs, and when it's time for them to renew a telecom contract, they're not asking themselves, how can I spend more money on telecom services? They're asking, how can I get the same or more services for less money? So while the demand and the critical importance of communications shows no signs of abating, it's been difficult for telecom companies to monetize this demand the way one would think they could. At the same time, the capital intensity of this business, the CapEx and investment that the companies are required to make to provide these new services, remains pretty high.
Yeah, it's so true. I think we can all relate to this idea that the average home is just consuming an enormous amount of data. And frankly, I think it's actually a bit crazy to think that these companies aren't price gouging all of us just based on the amount of data that we're using. But, I mentioned in the opening that the FCC had this auction for C-band spectrum. Now, I, for one, wasn't particularly familiar with the term C-band. So maybe you could explain what that is and tell us what the auction meant from an investment perspective.
Sure. Fundamentally, data can be sent in two ways. You can send data over a wired connection, and historically this has been over copper lines, which those are all moving to fiber, but again, a wired connection. Or you can send over a wireless connection, which is data transmitted over the air from a cell phone or some other similar device. Spectrum is what enables wireless communications. And what spectrum means is the government issues licenses to operators that gives them the right to transmit data at certain frequencies in certain geographies and at certain power levels. Now, not all spectrums create equal. Different parts of the spectrum band have different characteristics. And these generally involve trade-offs between the distance a signal can travel, the kind of barriers it can penetrate, and how much speed or data capacity it can provide. On the one end, low-band spectrum travels very long distances. It also is good at getting through barriers, through walls, into garages, into basements, and the like, but it has less capacity. High-band spectrum, on the other side, offers a high capacity, but it travels much shorter distances. And transmissions in the high-band part of the spectrum band are more susceptible to interference, sometimes from things such as trees, foliage, and the like. So again, different parts of the band have different characteristics. The C-band auction in December was for what's called mid-band spectrum. As the name implies, this is in the middle between low and high band, and it's something of the Goldilocks part of the band. Most people believe that mid-band spectrum will ultimately become the workhorse for 5G services. I'd also note that the amount of spectrum being auctioned in December was large, 280 megahertz of spectrum. So you have really two factors driving this auction: a large slug of spectrum in the important mid-band part of the spectrum band. And these two factors result in the auction just being very frothy. Original expectations, from us and from really people across the street, was for total bidding to be in the kind of $30 to $40 billion area. Total bids came in at $95 billion. It's more than twice expectations. And this has become the largest spectrum auction in US history. Globally, it was the second largest auction. The only one that was bigger was the European 3G auction back in 2001, which came in at $130 billion. But again, just a large auction any which way you want to measure it. I'd also add that the C-band auction, it's being financed primarily with debt. And this has raised some concerns from creditors and equity holders alike, as the amount being spent moved from $30 to $40 billion to $95 billion. That's a lot of incremental debt coming into the system. And when you kind of step back and ask yourself, how did this auction just come to these levels? How the dollars involved get so high? It largely is a function of, one, the importance of the spectrum being auctioned. Again, it's a large slug of desirable mid-band spectrum. And two, the low cost at which the debt to finance can be borrowed at. Interest rates are very low, borrowing costs are historically low, and that makes the burden of incurring additional debt to buy the spectrum less on the companies.
Yeah, so it sounds like from what you just said, the market environment or the investment environment is such that being financed primarily with debt was attractive for this particular auction. Can you just contrast that to prior auctions? Are they typically financed more with equities, or is it usually a 50-50 split? What does a typical auction look like from a financing perspective?
All auctions are different. Different auctions in different parts of the bands and different regions go for different prices. I would say the largest auction, which I reference in history, the European 3G auction in 2001, that was primarily financed with debt. And it actually got those companies in some trouble. In that case, a lot of the debt that was incurred was short-dated debt, less than 1 year debt, commercial paper, that kind of thing. And in 2001, 2002, as the dot-com bust ran through the system and the NASDAQ bust went through the system, those companies did struggle to refinance some of that debt. In this case, the companies are taking a different approach. The debt being incurred is generally on a long-term basis, so they de-risk it in many ways. And I'd also add the mix between debt and equity. It's hard to find clear rules around that because, again, there's a lot of auctions. They all have different structures and components. One thing, it wasn't an auction, but that was interesting, was the T-Mobile merger with Sprint. That was an all-stock merger. And while it combined the two companies, one of the driving reasons for that merger was a huge amount of mid-band spectrum that Sprint had on its books, which now belongs to T-Mobile. So in a sense, T-Mobile made its play in mid-band spectrum, not so much in this auction, but through its merger with Sprint. And that was financed inherently, partially with equity through an all-stock merger.
Got it. Now, I think inherently in a financing structure with a lot of debt, leverage is added to the system. So I just want you to talk about a little bit about that and just some of the risks that folks investing in the space need to be aware of. What does time horizon look like and just other risk implications?
Taking a step back and looking at it from a kind of higher level, I suppose, you have to realize that all spectrum purchases, spectrum purchases do not provide an immediate return on investment. When you buy spectrum in an auction or otherwise, you have to figure out what spectrum you won, figure out how you're going to incorporate in your network plan, and then you actually have to deploy the transmitting and receiving equipment on the cell towers to make this whole thing work. So there's always a delay between acquiring spectrum and when it can benefit your operations. In the C-band auctions case, what's kind of shocking really is this delay is very pronounced because much of this spectrum is not going to be available until the end of 2023. So again, there's a time delay, right? These spectrum purchases do not immediately benefit your cash flow or immediately do anything for you. It's all to more or less degrees in the future. The second thing I'd say is the C-band spectrum is being earmarked or targeted to go after the 5G opportunity. But really, the business case around 5G, both in terms of how much revenue is at stake there and what timeline to realize that revenue is, it remains uncertain. 5G, it's clearly important. It's potentially transformative. I'm a believer in 5G ultimately. But the most intriguing business cases between automated cars and smart cities and virtual reality, these things are years away. And, the ultimate financial models, they're just unclear. one day in the future, you're going to be going around the city in a self-driving car, and the car is going to be exchanging constant streams of data with all the other cars and everything else in the environment around it. Well, who's paying for all that? Are you paying for it? Is a car manufacturer, the government, an insurance company? How much is it all going to cost? The business models, we can all visualize what's going to happen, but we really don't know what the financial models are going to look like. And frankly, I think that is one of the key risks for telecom companies against the backdrop of 5G is what is their return on investment for all this money being spent? Specifically here on the C-band auction, what is your return on investment for the $95 billion you're spending on spectrum, much of which you're not going to get for the next 3 years? I would add from a credit perspective, again, this is more debt than we thought was coming into the system. It increases leverage. It does raise concerns around credit ratings pressure, as well as potential new supply coming to the market and similar factors like that. We've evaluated this risk, and we do believe it's manageable from the credit side. The companies have done a good job preparing for it. The cost of debt is relatively low, and there's a lot of different things companies can do to address their balance sheets if they need to and find themselves in an over-levered position.
Yeah, I'm glad that you talked a little bit about 5G and some of the question marks around business cases for 5G. We've spoken about that topic on this podcast series a while back, but the conversation I think then was really about the equity side of 5G. What else should investors really know about the credit perspective of 5G and other telecom services?
Starting at square one, telecom is generally attractive from a creditor's perspective. It's, telecom companies, they have hard assets, they have network assets. There are barriers to entry in terms of deploying those assets into the market and into the field. The business models, they generally are contracted or subscription-oriented kinds of business models. They provide, it's a recurring revenue stream it's predictable. And they have a decent degree of non-cyclicality to them. They have an almost utility-like function think about your own usage, right? It's almost inconceivable that you wouldn't be consuming communication services, at some level, regardless of the economic environment. And, while the spending in the C-band auction will result in the companies having more debt than we expected, keep in mind, this debt is being used to acquire spectrum. It's acquiring assets for these companies. And when you acquire assets, from a creditor's perspective, you're acquiring collateral and you're adding to our collateral pool. So again, the amount being spent was higher than we thought, but it's not going out in the form of dividends or share buybacks. It's going to build asset and collateral for our creditors' protection. I'd also say the largest bidders in this auction, these companies have additional levers to address higher than expected debt loads if they need to. These companies can cut their dividends. They can curtail share buybacks. They can sell non-core assets. So again, a lot of additional levers they can bring to bear if required to address their capital structures. And if you want to shift the lens to kind of a more equity-centric view of the world, I personally believe that one of the biggest challenges equity investors are grappling with is this inherent deflation in the industry, is this fact that the price per bit to move data just continues to drop. And this disconnect really between the amount of fundamental demand there is for the service they provide versus their ability to monetize that demand. And when you have that kind of dynamic, it makes having confidence about what a company's growth profile is going forward unclear, uncertain. And markets, they tend to discount uncertainty. They discount a lack of conviction when you don't know better and when you don't have better guideposts or milestones to look to. And frankly, this kind of environment makes the equity thesis, in my view, become more complicated. I frankly think this is part of the reason that a lot of telecom equity stories, I should say today, are tied to the dividend policies and dividend yields of the company, not really the growth potential of what the companies can do. So again, speaking from my own book to a degree, I suppose, as a credit analyst, I really do believe telecom is a better credit story than equity story at this juncture. And specifically over the near term, until 5G business cases are more developed and we can understand better what the growth and profitability and opportunity for 5G is from a financial perspective, credit over the near term is protected by being senior in the capital structure. And the uncertainty around the ultimate monetization of 5G, the ultimate business models of 5G and the like, it's much less of a concern for a credit investor than an equity investor. And I'd also just add, look, low interest rates are part of what drove the C-band auction to $95 billion. And we've seen this in a lot of industries, but these low interest rates, they're benefiting companies. And by extension, they're benefiting their investors. This higher than expected debt level, the extra interest burden that creates for the companies in the C-band auction, it's manageable just given where rates are. But if things change, if rates rise materially or there's other financial expectations that disappoint or what have you, having a more levered balance sheet becomes a concern, and creditors are going to be better protected given the levers a company can pull, cutting their dividends and reducing share buybacks and the like in that kind of situation.
Sure, thank you. That's a helpful framework, I think, for assessing the investment opportunity from both the credit and the equity side. We talked about the US auction being particularly large, and you mentioned the European auction many years ago. Just curious for you to talk a little bit about what you're seeing in terms of telecom companies outside the US today. Are they in a similar position as the companies here in the US, or what does the landscape look like?
Broadly speaking, the trends and issues globally or in the US versus non-US markets, it's a lot of the trends and issues are the same. In every market, demand for data speed and capacity is growing rapidly. In every market, there's a lot of capital intensity associated with these businesses, investing in both their wired and their wireless networks. Capital intensity, capital investment remains high. And there's a lot of competition. I mean, it's a competitive world, and the telecom sector is not immune to that. I'd also say low interest rates obviously are not just a phenomenon in the United States. Low rates in Japan and the EU, this benefits companies, as you would expect. And everyone's eye is on 5G, although, again, it's still unclear exactly when and what that means. One thing where we do see some differences is in the regulatory side of things. Different regulators in different countries, different markets strike different balances. As a regulator, you want to encourage competition and protect consumers and get as low prices as possible. But you also have to make sure that the industry is attractive enough to encourage investments by the companies to enable all these advanced data services. So you're trying to strike a balance there, and different regulators do that in different ways. I'd also say on the merger and acquisition front, one thing that, just to highlight, that is different is consolidation between wired and wireless operators is much more common in Europe. Smaller geographies make it easier to do a merger or an acquisition and cover an entire geography with one operator. For obvious reasons, that's more difficult in the United States, and we haven't seen that kind of consolidation to a degree that they've seen in other markets.
Okay, yeah, that's helpful comparison there. As we wrap up here, Darren, I'd love for you to tell us about expectations for this auction, investor implications, and just more broadly, what's your outlook on the space for the next, 3 to 5 years or so?
Kind of taking those in reverse order, I suppose. But look, from a credit perspective, we remain constructive on telecom. It's proven stability through COVID. The services are critically important to pretty much every individual and every enterprise in any given region. And while there is high capital investment activity, and the C-band auction is a great example of that, this capital investment adds to companies' asset bases. Hence, it adds to our collateral base as a creditor, which helps put us in a little bit better position. Notwithstanding the surprising amounts spent in the C-band auction, we really don't see meaningful fallout to the company's credit profiles. Again, interest rates are low, debt remains cheap. And these companies have a lot of levers they can pull to address leverage concerns if required. With respect to the auction more specifically, we expect Verizon and AT&T to be the largest participants. Both of these companies have the most need for mid-band spectrum. And T-Mobile, again, their merger with Sprint was, in a sense, their play in mid-band spectrum. They acquired a lot of it through that merger. So their participation in the C-band auction, it's much more discretionary, much more opportunistic than AT&T and Verizon. And, again, this is a large slug of attractive spectrum that's going to be at the heart of 5G services in the future. So the outcome of this auction, it is going to have a real impact on companies' competitive positioning going forward.
Well, Darren, thank you very much for those insights. I think that this is something that affects all of us. We're all very interested to see how 5G develops and rolls out to all of us in the coming years. I think we're all excited to see what's ahead for 5G, especially those flying cars. So thanks again for joining me.
Thank you. It's great to be here.
And to our listeners, if you've liked what you've heard, you can subscribe to the show via Apple Podcasts, Google Podcasts, or Spotify, or you can visit our website at www.nb.com/disruptive forces for more information about our firm and offerings.
This podcast contains general market commentary, general investment education, and general information about Neuberger Berman. It is for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. This communication is not directed at any investor or category of investors, and should not be regarded as investment advice or a suggestion to engage in or refrain from any investment-related course of action. All information is current as of the date of recording, and is subject to change without notice. Any views or opinions expressed may not reflect those of the firm as a whole. This material may include estimates, outlooks, projections, and other forward-looking statements. Due to a variety of factors, actual events or market behavior may differ significantly from any views expressed. Please refer to the disclosures contained in the episode notes and episode details, which are an important part of this communication. Investing entails risks, including the possible loss of principal. Past performance is no guarantee of future results.